What's up guys, Mullins Momentum here and welcome back to another video. In today's video I'm going to go over a couple tips and tricks for new traders. How to hurdle over the PDT level, how to grow your account, tips and tricks for getting around day trades, using possibly a cash account, using a margin account, overnights, etc. If you do like the video, be sure to give it a big thumbs up, sub to the channel so you always know when I'm either going live or I'm posting new content like this. So let's get right into it. So I first want to start off talking a little bit about what I did. So personally, I grew my account from around $1,000. I kept losing back to like 500. I would re-add to 1,000, adding back to 1,000, adding back to 1,000 as I took losses until I gained some consistency. And what I would do is I would go in pretty much all in every single trade. This is a riskier method, but this is how I grew my account. I would find good setups. I would use my whole account and I would use up a day trade. Now, under PDT, you do only get 3 day trades. So this would be a little tricky. It would take some time. I mean, it took me years to get there. But once you start growing, you get a little consistency. You can grow your account by chunks that way. Some people will use a cash account. You will restrict the amount that you can buy, so your account growth may be a little bit lower. You can actively trade more, but your account growth will be slower because you can't really use your whole account unless you're using it all. And then you're locked out for until that money settles. So what I did is I used a margin account. Now, a lot of people think of margin and they're thinking, okay, I'm borrowing the broker's money. I don't want to do this. I don't want to touch the broker's money. I don't want to use money I don't have. And that's not necessarily what it is in this situation. Margin just allows your trades to settle instantly. So instead of, using the broker's money and going like 4 times entry, like you're using 4 times your money or whatever, the margin is just used to settle your money instantly so that you can trade again, of course, until you get to the PDT rule, which is over 25K. So once you get over 25K and you're on a margin account, you can day trade as much as you want. You can keep making unlimited trades. But if you're on margin and you want to use your whole account, you only get 3 day trades in a week. So that it's like, I think it's T+2 right now. It used to be T+3, which is trade day plus 2 days. It used to be T+3, which is trade day plus 3 days, which just means, you take the trade on Monday, you get that money back. The money settles 2 days after that trade day, so on Wednesday. So that's how a day trade would work if you're under the PDT level of 25,000. And this is just for the US. Other places don't have PDT, but this is a US rule. So climbing to PDT, there's a couple ways to get around. There's a couple tricks that you can use. Say, for example, you use a broker that has 4 a.m. access. And something that I recommend, and it's great for newbies, is Webull. And let's say you open a Webull account, you have 4 a.m. access all the way to 8 p.m. access. So to get around using a day trade, you can buy something, say 7:59 p.m. Right at the end of the day, you see where it's set up. You already got through the volatility of after hours. It didn't have an offering. It didn't have negative news. You buy it at 7:59. You can sell at 4 a.m. if you want. As soon as the market opens at 4 a.m., you can sell if it goes up. You don't have to sell, but if you wanted to sell at 4 a.m., that's fine. You're only holding for 2 market minutes, or maybe even 1 market minute, because the market closes at 8, it opens at 4, and you don't use a day trade that way. So a lot of the times when I was growing my account, I would do overnights, and it was a little harder back then because I was trying to trade at 7 a.m. So the market will be open at 4, and I would have to hold till 7 before I was able to sell. But now you have brokers like Webull that you can buy at 7:59 and you can sell at 4 a.m. and that's not a day trade. So you can get a good trade in on say a momentum stock or a setup, something that has news, wait till the end of the day at 7:59, buy in, and then the next morning at 4:01, 4:02, I mean, if you're up, that's fine. If you're not, if you want to hold it longer, that's fine. But you only have to hold for 1 market minute and it's not a day trade. So that's one really good tip to get around, only having 3 day trades, is to do an overnight, especially on a broker that's simple and easy and has 4 a.m. access like Webull does. I'll put a link for Webull in the description so you guys can check Webull out. I recommend that to all new traders. If you're just getting into trading, you're not looking for anything too detailed, looking for a simple platform, Webull's a great platform. It has 4 a.m., 8 p.m. access. I think they have options now. They have a ladder trading now. They may even have crypto on there now. There's a lot of stuff going for Webull, so be sure to check them out. I'll put it in the link or in the description below. So besides that, I would say if you are just trying to get into trading, but somehow you have the money to get over PDT. Let's say you do have 25 grand, whether it's, savings that you've saved up or whatever else. I don't care how you have it. But if you have 25K and you're looking to get into trading, I personally would not recommend you put that 25K straight in and try to just start day trading. That's a recipe for disaster. Sure, you can make it. Sure, you can learn. Sure, you can get lucky, honestly. Lucky at the beginning and begin growing your account from there. But I would say start 1,000, even 500. Anything under 500 is a little tough because the gains tend to be so small that you're not willing to take the gains and you kind of feel like you're just going nowhere. But over 500 towards 1,000, you get some decent gains combining together to where you get some good growth. So if you put that 1,000 in and you're working with that 1,000, and like I said at the beginning, you start losing some, you lose back to 500, you don't want to go under 500, just add some back. If you don't have extra money, then just wait. Don't blow all your money. Don't lose any money that you can't afford to lose, but just keep loading your account. And that way you're only losing like 500 at a time. Instead of with 25K, you're losing 2,000, 3,000, 4,000, 5,000 if you don't know what you're doing. So when you're starting out small, you lose small. And once you get the skills, to start growing, those skills work at 1K, they work at 10K, they work at 25K, they work at 100K. So once you get the skills growing and the consistency growing on that specific account, then you can begin to grow from 1 to 2 to 4 to 5 to 10. And once you get that growing, it does take time. It takes months and months and months, if not years. But everything you learn from that 1K to 25K journey will teach you everything you need to know for the rest of your entire career. So anything you learn in that period will absolutely coach you throughout the rest of your career because 25 times in or 24 times in your account is everything you need to know to maintain consistency in the market. Also, I'm a big advocate of don't try to go for home runs. Just stack up the wins. If you get your wins, take it, move on to the next trade. And you get compounding gains that way. So let's say you start out with 1,000. You make $50 in your first trade. The next trade you go in with 1,050. And let's say you make $60. The next trade you're in with 1,110. And you just keep compiling that. And it gets bigger. And the gains compound and compound and compound. And you don't have to go all in once you get like above 15 or 16,000 or 20,000. But at the beginning, that's what I did. You compound your gains a lot quicker when you go all in and just have very low risk reward. You lock your gains in, make sure you're locking them in, and you compound your profits. Now, if you do want to go with a cash account, some people do that. Some people have a lot of luck with that. But if you do a cash account, you can only use a portion of your account. So let's say on a Monday, you use up a 30-year account of buying power on a specific day trade, and then you only get that much for that trade. And if you make money, great. If you don't, you're going to feel like you're locked out for the rest of the day because you're out of buying power. But with margin, you have your whole account. You can use your whole account and buy in at once. Put that towards a trade. Put that towards a solid trade. Make your gain. Get out. Lock it in. Move on to the next one. Now, with a cash account, sure, you can day trade more. You can use some different techniques and day trade, but you don't get your whole account and you can't grow it as much. You're making a smaller percentage than if you use your whole account for a trade. But some people use cash, some people use margin. It's just up to you. It really is up to you. But the way that I personally did it is I use margin. And like I said earlier, it's not using extra money. It's just using the money to settle. So I would buy using just my account balance. I would get in, a good setup that I thought was a good setup. If I get green, then you sell out and you continue on with the next one. Whether you take a day trade the next day, whether it's the same day, whatever, whether you're doing an overnight. But I would just stretch those day trades out and continue piling up and piling up. And a lot of it is overnights. Overnights definitely help out a lot, especially if you can get a gain from, 7:50, 7:59 to 4:10 a.m. and you didn't use a day trade, and you got all your money available to you to day trade the next day. So that's a big key factor that you can pull off, is using that overnight. When you are starting out like this though, and you're trying to grow your account and you're not really trying to like make money yet, you're just trying to get your account, growing over PDT, trying to get some consistency, make sure to keep your risk reward really tight. You really don't want to be holding on to a loser for long when you can just cut it, move on to the next trade. And also when you're in a gainer, and what I mean is you're in a trade that you're winning on, be sure to try to enter on all your trades in one entry when you're under PDT, because if you enter in 2 entries and then sometimes you'll scale out in 2 entries, that will count as 2 day trades. So try to take one full entry if you're doing the all-in margin technique that I was talking about. But you can scale your way out, like say sell a quarter at a time as the stock's moving up, and it'll still only be 1 day trade. But if you enter twice, let's say you buy 2,000 and you buy 2,000 more, when you start scaling out multiple orders, sometimes that counts as 2 day trades. So just keep that in mind as another little tip to avoid multiple day trades used in 1 day. I just want to make this short little video, kind of go over, compounding your gains together. Starting small, don't try to go all in at once. You can use a cash account, you can use a margin account, but be sure to keep your risk reward low, compound those gains, and you'll get your account growing in no time. Work on some consistency. Once you get some consistency, you'll see your account go. No reason to start with big and just try to blow up your account and then try to make it all back in one trade. Just start small, keep adding as you can to your account if you start losing. But once you get that consistency, your account will grow. Thanks for watching the video. Thanks for all your support. And I will see you guys all back on stream Monday morning, 8 a.m. See ya.